Watching Masters in Trading Live with Jonathan Rose.
What's up, dear friends? It's Jonathan. Hope you guys had a great weekend. Welcome to Masters in Trading Live. Masters in Trading Live. I get on here live every day the market's open, 11 o'clock Eastern time. Go over a few tidbits of the market, and then once in a while we'll share our trade of the day. We are not messing around today, guys. This is a big deal. So last week VIX spiked, right? VIX spiked, came right back down. Really big movement, lots of volatility in the market. Today, I got 5 charts to support why I believe the QQQs is about to have a rip your face off rally. QQQs, NASDAQ is cheap. NASDAQ is inexpensive. What we teach at Masters in Trading is nothing is just cheap or expensive. Something can be cheap or expensive relative to something else. Qs, NASDAQ is obnoxiously cheap relative to the S&P 500. I'm going to show you. We're going to do a little volatility breakdown, and then something that you didn't notice that happened last week. Really big news. This news was kind of buried. Did you know that last week Meta had their biggest bond offering in the history of the company? Last week, Meta raised $2.5 billion. That's bullish. Let me explain why. Let's go to the charts. I've got a lot to cover today, okay, guys? Let's get into it. That's weird. Right now, 431 is your support. Last trade 450. I think the last trade's 453. This is one chart, one reason we might see a rip your face off type rally. Audio is okay, guys? Kelvin, audio is okay? Making sure my audio is good. The second reason, QQQs, the first reason I just shared was a long-term chart on the Qs. The second reason is we're looking at the expected move. The expected move, let me just label here. This is just volatility. How the market makers are pricing volatility. Now, QQQs, market makers know this. So over the last 2.5 years, QQQ stays within its expected move 79% of the time. Right now, we're outside of our expected move. That's the second reason you can expect a rip your face off rally. The third reason, VIX, Volatility Indice, made a gargantuan move last week, and then it about faced and came all the way right back down. Another expected move. Market makers are excellent at pricing the VIX, right? Very, very liquid. Well, the VIX stays within its expected move 71% of the time. Right now, it's outside. If it trades lower, it'll fall inside. When volatility goes down, markets go up, right? When volatility goes down, markets go up. That was our third reason. Our fourth reason, this is a fourth chart of why NASDAQ could expect a rip your face off rally. We have NASDAQ versus everything. versus the S&P, versus the Dow, versus gold, versus the Russell 2000, versus oil, CL. All of these charts, right? This is NASDAQ, so purple right here. If you think the purple line is going to go higher, you would buy the NASDAQ and sell oil. That's not the trade that I like. The trade that I like is going to be this puppy right here. Woof, woof. This is NASDAQ against the S&Ps. That is the trade. The next chart is going to show you why that is the trade. Chart 5. These are cycles. A cycle allows me to look at a 5-year chart and break it up into cycles. Each of these is a new cycle. So I can go back to 2019 and analyze 1 year at a time. We're looking at NASDAQ against the S&P, NASDAQ against the Dow, and NASDAQ against the Russell 2000. 2019, they're just strong. 2020, NASDAQ is strong relative to the others. Little weak, rallies, they're all kind of moving together. They're all kind of moving together. They're all kind of moving together. Woohoo! This is the zero line. Now, this proves to be support and resistance. So right here, NASDAQ S&P, it got down here. You want to buy NASDAQ and sell S&P. Right now, NASDAQ is cheap. Cheap, 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 cheap. S&P is expensive relative to the NASDAQ. So bullish NASDAQ, not S&P, not Russell, not Dow, not oil, not peanut butter, not cocoa. QQQ NASDAQ. Now, oh, here you go, Jonathan. Thank you for breaking this up. I gave you a own separate chart. This is just showing S&P versus the NASDAQ. And these are all these separate cycles over a year. And I'm just showing, ooh, it looks like that. It looks like that. You come down and you mess around with that zero line, and then you rally. QQQ, we want to get long. Now, how do we get long? Well, you could always just buy the QQQs, right? It's an ETF on the NASDAQ, or, as we like to say at Masters in Trading, the creative trader wins. So, what if we look at what's under the hood in QQQs? Microsoft's 9%, Tesla's 2.5%, and you can see the weighting of each one of these. Now, when the NASDAQ's cheap, that means they're all cheap. But they can't all be cheap, right? One's got to be cheaper relative to the other. So that's what we'll start looking at. And that's what I've done here. And you could try to do this on your own charts. Apple is the green. QQQ is the white. And you can just see how the Q's on the white, how they're all just kind of following along. Now, right now, on here, Meta is pretty inexpensive. What I like about Meta, as I mentioned earlier, Meta, I'll get to that chart, Meta had a $10.5 billion bond offering. That $10.5 billion bond offering was last week. It sold out like crazy. I think they were giving 1.3% over treasuries. Now, this chart is just trying to show you how I want you to be creative, because you probably don't realize this, but the VIX has symbols for Amazon, Google, and what's that other one? Amazon, yeah. AZN, GOG, and APL. And so for Apple as well. looks like I messed this up a little bit, but the VIX, if you want to look at the VIX indices for these separate stocks, VXAZN, VXGOG, and VXAPL will get you there. Next topic. Actually, I got two more topics. PAS. PAS is a name that we've shared in the free portfolio. So we want to add a level of PAS in the free portfolio. So let me just show you how we're going to do that. Opening this up here. Let me make sure we can get it bigger, but PAS in the promotional portfolio, we are going to add a tranche, and let me just get the exact level. PAS September 20 calls for 90 cents. PAS September 20 calls, we are buying for 90 cents. As far as Meta, I like getting long the stock. I like getting long Meta. Meta, I like being long the stock. I also don't mind being long some vertical credit spreads. Maybe we're selling 480s and buying 460s, something like that. Or you could just buy stock. I like being long Meta. So it was kind of cool because I researched this for a ton over the weekend. And everything I came across, even right now, NASDAQ's starting to rally. It's up $4 since I originally made those charts. Whenever you start to see overlapping numbers, overlapping reasons. And when I'm talking about overlapping, I'm talking about 5 charts. I didn't find 7 charts, I just picked out 5. I found 5 charts, and every single one of them gave that reason for NASDAQ trading higher. Now, when we say NASDAQ trading higher, am I 100% certain? No. But let's say I'm 50% certain that NASDAQ is going to have this rip your face off rally. Then what we look to do is we want to find options where we can get 4-to-1 return, 5-to-1 return, 6-to-1 return. So it's okay putting yourself out there, making a big call, hoping for a big move, because if you get it, you'll get the payoff. And for that, we would look to buy some upside calls in QQQs. We could talk about that in our Discord. For everybody in our All Access, you guys don't go anywhere. The earnings trades have been phenomenal. I got another earnings trade for you, and I got a divergence trade for you. You guys don't go anywhere. Everybody else, I'll see you live tomorrow, 11 o'clock Eastern Time. Until then, the creative trader wins.